Hello and welcome back. It's Monday. I hope you just took a big hearty sip of your morning brew while reading the morning brew. And now you're on Facebook, LinkedIn, YouTube, whatever. You're trying to escape the reality of what you just read. And then you ran into me. I'm sorry. I'm Chase Majerus, the host of your real estate and mortgage news web series called This Week Today. Please, everybody, settle in, settle in. It unfortunately doesn't get much easier from here. Most of the news that we share here on the show pertains mostly to the United States, but I want to bring you to a bigger scope with the pandemic currently flaring back up all over the world. In previous financial downturns, commercial property loan losses were heavy, and there are worrying signs that such a trend could be repeated this time during the pandemic-induced slowdown, Oxford Economics' Adam Slater said in a report. So let me give you an example real quick, all right? During the 2008 Great Financial Crisis, commercial property loan losses accounted for between 25 and 30% of total loan loss write-offs in the United States. Oh yeah, and by the way, large commercial real estate price declines generally translate into big losses for banks. So, looking at this from the world view, those risks look like the highest in places like the United States, Australia, parts of Asia such as Hong Kong and South Korea. And yeah, I know that sounds like a really big deal, but I don't like leaving you on a dark note. So here's the upside. Banks these days are in way better shape to absorb those shocks as compared to a decade ago. Their capital and leverage ratios are around double the levels that they were back then. In recent weeks, we've talked a lot about IPOs, if you remember, and even now I'm here to talk about how CoreLogic, a California-based corporation providing financial, property, and consumer information analytics and business intelligence, recently confirmed its entertaining offers to sell at or above $80 per share. I wanted to figure out why this is happening so much. Why are all these mortgage lenders specifically in the stock market news? I'm just a nosy guy though. I wanted to know. But Housing Wire, y'all beat me to it. More precisely, Patty Cook, CEO of Finance of America, which is another company, by the way, looking to go public in 2021, said that one major reason why everyone wants to go public, it's trending. No, I'm just kidding. Patty Cook mentioned that it's the capital flexibility by having public debt. Also, it offers all types of IPO newcomers the ability to let analysts and economists and blah to look at their StatCast like it's a fantasy mortgage lender league, whatever, which I just lost my last fantasy football game and it's kind of throwing me through a loop. Anyway, and many companies have their strengths and they want to be able to use those comparisons to their advantage. That's it for This Week Today, guys. Thanks for joining me. It's officially November. I got my November fall flannels on now. Hopefully I can get a few more and look a little bit more trendy for this time of year. But until then, we'll see you guys on the next episode.